thank you everybody for coming, of course, while this setup can happen. We have this series of, we have done, I think 2, 3, 4 programs earlier also on Gift City with collaboration with Gift City. And at AMA, the role is that we are playing is we are helping, supporting industry, making them aware of so many things that are happening in the country, happening in the state. And naturally, Gift City is a very important development, which is what is happening in the state. So many, IFSC is a place where we should invite people. I went to IFSC, and then of course the whole SEZ area is a seat to believe it, the number of companies that are operating, the number of companies that are operating, number of companies that are coming in, number of sites and construction that is happening, the quality of construction, and certainly the business that is happening at the Gift City is phenomenal. So every time I attend a Gift City seminar, I attend a Gift City related function, I certainly get to know something new about Gift City. And certainly I get to know about what is happening, what is the future, and how people are doing business at the Gift City. Even the bankers, I was meeting a few bankers before a few times. There's a huge amount of, like, say, just to take one banking business is airline leasing and airline transactions happening. Now, which was always happening overseas, and overseas leasing. So many of the clients, and one of the clients that I have, that they used to have airlines outside India, aircrafts purchased also outside India and leased to India, and then all foreign exchange was happening. Now so many of them are shifting. The same aircrafts which were purchased outside are coming to Gift City, and then it is leased from Gift City. Makes as much sense. So this is just one of the several things, and I think sure Sandip bhai will give more flavor, more ideas of what is happening in the space in Gift City, and that's what we are here about to know. So this is a session 1 on Global Treasury Operations on Gift City, and we have the stalwarts here. We have, thanks Maulik bhai, thanks Jugal. Jugal is here from EY, Mumbai. Maulik bhai is here from Kotak, and you operate from Gift City, if I mistake not, right? And certainly Sandip bhai is our IFSC man, the head of IFSC at Gift City. We are waiting for Ketaki to join. She will join. We will start the program. Ketaki is the partner, Cyril Amarchand. She is also operating from Gift City. She is based, and that also says that when such large law firms, such large banks are operating full-fledged with their staff over there. By the way, Sandip bhai, I am also on the board of 2 private equities, multiples. I am on there at the Gift City itself. So I am on the investment. So I am also part of your Gift City man, where I am on the fund, and these are large operations. These are large funds. These are all $1 billion plus funds that I am on the investment committee. 2 funds of multiples that I am on the investment committee. So my role, of course, is having the speakers to be giving us the knowledge today. And then I will introduce them, handing it over to Sandip bhai, and who can take it further. But I would want the speakers to be here on the stage, please. And then I will introduce you, all of you, to at a time, so that then when in the process of the seminar, we do not waste time. So Sandip bhai is the head of IFSC, wherever you're comfortable. They've already placed the names. Head of IFSC department. How many of you have visited Gift City by any chance? Yes, it is see to believe it. And last time when I visited, which was just 10-15 days back, I said this is the Manhattan in making. Literally, right, Sandip bhai, we can say this is a Manhattan, a more organized, better Manhattan, where there would be sun also. Manhattan, if you're walking on the streets, you don't see sun because the towers are so high in the streets, you don't see it, we can say, but more organized man. So that's the beautiful place which is coming up, and more than the beautiful, the substance, the business that it is going to do, and it is doing already, is something that we are very keen to know more about, Sandip bhai, today. So he is the head of IFSC department, Gujarat at Gift City, where he plays a very important role in developing and promoting India's first international financial service center. With over 15 years of experience in financial services, regulation and policy department, he is actively involved in this from inception. You've been with Gift City now how many years? 10 years, and that's what we are saying, from scratch almost it is coming up. His work with regulatory bodies, IFSC, FSCA, RBI, SEBI, etc., And he is an author of the book Gift IFSC, a comprehensive guide. He is recipient of 40 under 40 investment professionals and has previously held roles in HSBC and NSDL. So we have anything, of course, we have to have something to greet as a token of appreciation. Thank you. Thank you. Then we have Maulik Bhai. Maulik Tejani is the CEO and head of GIFT IBU. IBU is the business unit. At Kotak Mahindra Bank Limited, leading the bank's strategic initiatives at the GIFT City in Gandhinagar, with over 2 decades of experience in corporate and wholesale banking. And I think there's 2+ decades, right? 2.5. So over 2 decades, 2.5 decades that he is a banker. And we shared, of course, Deloitte also as a platform, as our alma mater in terms of the profession earlier. So he is the head of corporate structured products at Kotak Investments and senior EVP heading the northern region at Kotak Mahindra. So these are the positions over the last 2 decades that he has held. Earlier in his career, served ICICI Bank across government and agri-business, contributing to policy and product innovation. Brings deep understanding of financial ecosystem, has consistently driven business growth across traditional and emerging markets. Thanks, Maulik Bhai, for joining us today. We have a gentleman who is specially traveled for this seminar. Thanks so much, Jugal. Jugal is a director in EY, India's tax and regulatory practice, qualified chartered accountant and company secretary with over 17 years of experience and specializes in financial service sector. He has advised several financial service and non-financial service clients in identifying and implementing structures based out of GIFT City, which inter alia include sectors in banking, insurance, funds, treasury centers, etc. Also works closely with IFSC and GIFT City authorities on various GIFT IFSC related developments and from a regulatory and this tax perspective, I would think Jugal is so very important because everybody is trying to understand that CZ or domestic tariff area and GIFT City, whether they do an establishment outside, inside, and then what are the tax benefits both in terms of indirect tax and direct taxes. So that's one very important perspective that Mr. Jugal Kajaria will give us today. Thanks again for coming from Mumbai for this seminar. And we have Ketaki joining. So we'll wait for Ketaki. I will introduce her when she comes in. Or maybe it's a good idea I introduce so that I don't break the rhythm when Sandip Bhai, you're taking this further. So Ketaki is a partner again, as I said, that they have an office. They had a small office. Now they got into a big office in GIFT City. So they're operating GIFT City with several partners and several people established, working, operating from GIFT City. Partner at Cyril Amarchand Mangaldas, leading the firm's IFSC GIFT City practice and playing a role in its fintech and financial service practice. Extensive experience that she has in cross-border and domestic M&A, joint ventures, private equity and venture capital. And as I just mentioned, there's a lot of private equity is funding through. And these funds that I am also on, but they invest across the globe. It is not just that GIFT City investments are happening only in India, but certainly for India, this is GIFT City is a good structure, and maybe Jugal will throw some light on what are the benefits also from tax structure point of view. Her work includes advising on complex regulatory matters, transactional structuring and policy advocacy, notably supporting Deakin University's IFSC campus setup. And we are hearing in the news last 2 days that there's one whole building just for the universities which is happening. And that's, I think, a lot of people are looking forward to that. The Harvards and the Whartons of the world might be having some place over there to give us more education. And she is recognized by Legal 500 as a next generation, please come, next generation partner in fintech and financial regulations. Thank you, Ketaki. Ketaki, I said I would not want to break the rhythm, so I introduced you. And believe me, I introduced you well, right? So,
I'm so sorry for
No, not at all. So lawyers, we know, lawyers are busy people. The doctors may come on time even on emergency, but lawyers are the most difficult busy people. And that's good for all of us and certainly good for India, but as good for Gift City, that lawyers in Gift City are so busy. So we know that Gift City is doing so well. And then certainly I am excited today to know more from you people. Thank you. Thank you, Ketaki. Sandip bhai, do I hand it over to you to then take it further and then we can have other panelists. So you will be taking care of the panel discussion. Right. So ideally I should be sitting over there. Right.
As you feel comfortable, and if you sit here, we'll also ask questions to you.
That is why I use the word ideally I should be sitting over there. But happy to be here.
Thank you very much. I think global treasury is a very unique subject and which is kind of not so common in Gujarat and Ahmedabad. And I'm very happy to see large number of people coming to understand the global treasury operations. And probably when we talk about finance or business, I think the language of business and finance is Gujarati. And coincidentally, all the panelists can also speak Gujarati because I understand she is also Gujarati. So probably I would also request during your discussion, add the business finance language of Gujarati so that it adds flavors to what we are going to discuss. Probably, we are going to have next 60 minutes, we'll discuss more in detail about what's happening more from a treasury perspective. But before we deep dive into the treasury or the key core aspects of the today's discussion, I would also take this opportunity to kind of give you a broad perspective of what's happening in GIFT City, because many a times all of you read and hear, koi var university set up kari rahi chhe, to koi var bank ni branch avi rahi chhe, or some events are happening. So you may be wondering what's happening in GIFT City, and that's where it's important to understand the nature and the perspective of the business landscape in GIFT City, not only from a business perspective, but also from the investment perspective, how you can become part of the overall journey. And I'm happy to note that you are part of one of the leading alternative investment fund in GIFT City. I think the size of fund is more than $1 billion, right? 12,000 crores have been invested, and he is part of decision making in terms of where to invest that money. Renuka Ramnath is the very well-known fund manager in India, and we are proud to have them in GIFT City, because otherwise, if it was not GIFT City, it would have been in Mauritius or Singapore or any other jurisdictions. And that's the beauty of the GIFT City ecosystem and structure, where what we are trying to do is to bring the business back to Indian shore, which ideally, has gone to Singapore, Mauritius, or other jurisdictions. And Government of India in 2015 took a very important decision to kind of notify the special economic zone of GIFT City as the International Financial Services Center. So IFSC, and all of you and all of us should be proud of, basically, because India's first international financial center has been notified in Gujarat at GIFT City, which is a very important milestone for all of us. And otherwise, generally, Gujarat has been known for manufacturing side of it, and I'm sure the crowd present here are also some or other way connected with the manufacturing side of the business activities. But GIFT City is trying to bring the financial services sector and fintech in the ecosystem, and that's where there are right kind of regulations, tax regime, have been notified by Government of India, so that some of these businesses can happen efficiently from the jurisdiction. The good part is the panel members have been working on ground on some of these regulations and tax. Ketaki, as a lawyer, she has worked and dealt with many of the transactions, for the various institutions in GIFT City. Jugal, I'm sure, has advised many companies to set up their office in GIFT City, either a foreign bank or an insurance firm or an alternative investment fund. Maulik bhai, very seasoned banker, I think he has spent most of his career in either Mumbai or Delhi. It's again a fortunate part for us that such a senior leadership is now moving to Gujarat and GIFT City, and he's trying to build an international business for the Kotak Bank in GIFT City. So I think to start our discussion, probably it's very important to understand some of the terminologies before we deep dive into some of the businesses, because GIFT City is also special economic zone, it is also international financial services center, and it also has certain domestic companies. So I'll come to Ketaki, and if you can, on a very layman, explain, what is SEZ, what is IFSC, and what is the difference between the two. And probably then we will come to the actual business side of it. Thank you. Over to you. Yeah.
Sure. So, as Sandip mentioned, the IFSC was housed in the SEZ. I think it all starts from the whole thought process of saying, how do we ensure that the business of this country helps progress the people of this country, which is what our PM also goes about saying all the time, make in India. And today even Trump wants to follow make in US, right? So in order to ensure that we are able to provide that global platform as well, given our rupee is not freely convertible, in order to ensure that we are able to provide that global platform where people can deal in their foreign businesses from India, while being in Indian shore, still have the ability to use dollar currency, which you can't otherwise do, and also raise cheaper offshore fund, which you can't otherwise do, because in India, the moment you convert the hedging cost and the forex conversion, all of that makes it very expensive. So we decided to create this niche, which is non-resident from a legal fiction perspective. At the same time, how do we try and incentivize people that please come and use this space, and to enable, we will help you with all of those host of benefits, fiscal benefits, which could help you get to a level where it makes sense for you to evaluate this Indian global offshore as compared to the global offshores that were being considered otherwise. The likes of London, Singapore, New York, etc. So in order to provide that fiscal benefits without making lots of change in our law, the simplest was to put it in an SEZ, because the SEZ regime back then provided a bunch of benefits to various entities set up in IFSC. And that's how we set up in the SEZ. The SEZ units are only governed by the SEZ law, but IFSC units comply with SEZ as well as IFSC. All entities set up in IFSC are regulated by IFSCA, which is the unified regulator for IFSC, which is the International Financial Services Center. Everything financial, be it services, products, financial market, the global financial market is set up in IFSC. So that's basically the distinction between SEZ and IFSC.
Thank you. And just to add, when a unit is set up in SEZ, it is like a resident entity still. While they are allowed to do a foreign currency transaction, but under foreign exchange management, they are still resident. While IFSC unit is recognized as non-resident. So you are actually a foreign entity in a foreign jurisdiction. And that's where, many of the benefits come in terms of dealing in foreign currency businesses. Now, coming to Jugal, I think we understood SEZ, IFSC, and the IFSC Authority Act 2019, which governs the jurisdiction in terms of who can set up and what kind of activities which can happen. If you can help audience here, because the crowd is also connected with various businesses in their different domain. So quickly, if you can also help us understand what kind of businesses which can be set up in the IFSC zone, because we understand banking is one or the insurance is the one. But I believe there is a long list of business activities which can happen or which can be set up in the zone. So if you can throw some light around that.
Sure, Sandip. Thank you. So I think this is a very interesting concept which is there. One of the things, and Ketaki spoke about the incentives, is there is a non-resident status being granted. It is an easier concept on paper, but when you actually start implementing that, there are so many use cases which starts coming in. And every company, okay, will have a different reason why they want to use this benefit. I am a tax guy and I'll speak about tax consequence later, but what I want to speak about is the business part of it. Let's take, as Sandip started, let's take Indian multinationals, right? There are a lot of multinationals now expanding their wings and wanting to go global, okay? The first thing they want to do when they want to go global is to set up a holding company, okay? Now, holding company is basically a box entity which will then hold overseas structures. India never had that platform because India had FEMA restrictions and you could not create a company which had dollar investments. And therefore starts the base case, which is you create a company in Singapore, Netherlands, okay? Now think of it like a businessman, like I'm not going to go any technicals. If you want to create this structure, you are like, okay, આપણે સિંગાપોર માં કે નેધરલેન્ડ્સમાં ખોલવું પડશે. Do you know the law of that country? Do you know people who are the service providers? Extremely difficult. Then you start the entire journey, આને પૂછો, તેને પૂછો, બધું કરીએ. It is headache, okay? The government gives you the same platform. You know the government, you know the regulation, you are in the same time zone. You have a problem, take a flight. Gujarat, Ahmedabad is not far away. Things become much more simpler. So a lot of headache goes away. That's the structure part of it. Now comes the money part of it. You will have a company in 10 countries across the globe, okay? Now, somewhere there is shortfall of cash, somewhere there is excess cash. How do you manage all those things? You create a treasury, okay? And these are simple things which happen in life. I'm not even going to complex. You set up a blocker entity. What will it do? You put that money one time, okay? Say assume you put in 50 crores of rupees. That company will manage the cash across the globe, okay? You don't need to every time come to your mothership entity. What is the biggest benefit of that, you know? One, no compliance. You are not running an exchange risk because you say India ka business na paisa India ma rehse, bahar na paisa gift ma rehine, baharu faravis. So you are cutting out the exchange risk out of that. That becomes the second point. Third point is your tax holiday. The government says, look, you are doing this, there will be, we want to incentivize this, so they give you 10 years tax holiday. That's the benefit. Fourth, if you are, for your global operations, if you want, you can take centralized borrowing in GIFT City and give lending outside. Again, take of an example, you take a ECB borrowing from non-resident, money comes to India, and then you are using it to funding outside of India. It is very inefficient, okay? Because you are taking multiple currency risks on that, then you take multiple hedges on that. That all is cut, is all netted off at GIFT City. That becomes really attractive. Now, the most important part. When you were in Netherlands, Singapore, Dubai, you were always worried because you will put in 1 or 2 junior guys over there, correct? Because there is not much work. But the real guys who are running the show are the promoters sitting in India. They are the ones taking calls. In those structures, you perpetually had a problem that a poem or PE, okay, which is place of effective management or permanent establishment, in a more simpler English, basically the government coming and Indian government and tax office saying that आपका ऑफिस तो ત્યાં છે પણ તમે ધંધો તો અહીંયા ચલાવો છો તો અહીંયા ઇન્ડિયામાં ટેક્સ ભરો. That was a perpetual risk to the structure which is now mitigated. So think of it, what Ketaki said, structure, concept and tax holiday. Now all of that is coming together for an Indian multinational and giving you a platform to do so many things. That's one, you create a holding structure which can do so many things. Second, okay, the second part is reverse. Global multinationals were also doing this same thing. They were, when they wanted to enter India, they would go to Singapore, Mauritius, etc. They can come to GIFT City. They are creating holding structure. The India CXO does it. The biggest benefit now is there is a global minimum taxation coming at 15%. If you are in tax havens, you will be impacted by this. That all is mitigated because you come to GIFT City and you have operating businesses in India. So these are like few. I think I'm only touching the tip of the iceberg. We are having numerous solutions. And in fact, Sandip, recently when you and I were speaking, there were people coming out with use cases and teaching us that we don't want anything to be done with India. We want to do with US and Gunzi now. So these kind of use cases, all of this, and the government of India is very smart. They are not giving you tax holiday for free. They are getting actual genuine businesses which is adding foreign currency or hard foreign currency to Indian exchequer or balance sheet, which is what India needs. That is really the use case at ground level.
No, great. I think, and that has been the objective of developing GIFT City and the International Financial Center, because idea is to see how do we facilitate and enable our Indian operations who are actually going global. We'll discuss more in detail about some of these use cases. But before that, coming to Maulik Bhai, because you may be wondering, Kotak Bank ni branch Ahmedabad ma bhi chhe, Mumbai ma bhi chhe, and GIFT City ma bhi chhe. So what is the difference between these two branches? And how it is, what kind of transactions which are happening in the Kotak Bank IBU, because it's not a normal domestic branch, and that's where probably before we deep dive into the treasury side of the activities, if you can help us understand the Kotak Bank's operations in GIFT City, because I understand many of you who are connected with your own businesses or your firm, you have export oriented business, or some or other way you are dealing with dollar. Now when you are dealing with dollar or any foreign currency, Kotak Bank IBU will have a role to play. So if you can help them understand this.
Yeah. So Sandip, we talk about basically a domestic banking. So most of these people here are resident Indians, right? So they have their factories, companies, which is based out of India. So whenever they want to take any banking related services, they have to go to domestic branch. But if any NRI, okay, which is outside India, and they want to utilize any banking services outside India, okay, so they have to open the account with any foreign banks overseas, right? They cannot transact with domestic branches. They can have a limited transaction with domestic banks, like for NRO, NRE, those kind of accounts. But other than that, FCNR deposit, they will not do any other business. They have to, if they want to take a loan, they have to go to foreign branches, okay. Second thing is that related to corporates. So in case of corporates, they can utilize certain services, which is basically related to, say, your remittances, those kind of services they can use from the domestic banks. But when they want to have a services of, say, foreign currency loan, okay, outside India, they have to depending upon the foreign banks, okay. So those kind of corporates, if they want to take or avail foreign currency loan like ECB, or they want to avail bias credit, they have to depend upon foreign banks. So whenever a bank who set up the branch in IFSC, that becomes a overseas branch. And that overseas branch can provide trade credits, bias credit, and ECB services to Indian corporates. So this is the major change that is happening out of IFSC. So many banks, like almost 6 PSUs and almost 10 private sector banks, they've set up their IBUs here. So Kotak is one of the bank which is having foreign branch at DIFC and GIFT City. So we have only 2 branches, which is outside India. And from there, we are providing these services. This is how it is different from the domestic side.
So probably as an Indian corporate, say even if your office is in Vatva or GIDC or any of the industrial zone in Gujarat, and if you're looking for a dollar denominated loan, because many a times you have dollar earnings and many times you have a dollar payment to be made. Now in that case, as you know, that Reserve Bank of India permits Indian corporates to avail foreign currency loan, which is generally known as ECB, external commercial borrowing. Now, till recently, those ECBs were provided by the overseas branches of Indian banks or foreign banks. So now, Kotak Bank from GIFT City can actually offer you and provide you dollar denominated loans. And I think it's a great value proposition, and many times we don't appreciate which is something closer to us, right? Najik ma hoy to em lage are thatu hase. I mean, we don't value it. But I think Kotak, today the banking asset size by the IBUs in GIFT City is more than $71 billion, right? $1 billion is close to now 8,000 crore, 9,000 crore now.
8,600.
Trump will ensure it becomes 9,000 plus. So the more than $71 billion of banking asset size is today lying on the GIFT City branches. And Kotak Bank is one of the leading banks which is actually providing such foreign currency loans. So I think, again, very important point for all of you that, you know, dollar denominated loans can be availed. Second, he very important point mentioned is about the buyer's credit and trade finance. I think many a times you have dollar denominated transactions happening where you need to have a buyer's credit. Kotak Bank can offer, the buyer's credit in foreign currency today from GIFT City. And as you rightly mentioned, there are 31 such banks which have set up their shop in GIFT City. So probably, I think, based on these initial discussions, you would have realized that there are financial institutions where 31 banks, 35 plus insurance firms, there are, 2 international stock exchanges operating. I'm sure stock exchange ની વાત કરીએ તો GIFT ગુજરાતનું નામ ઉપર આવે, રાઈટ? કોઈ જગ્યાએ મેં વાંચેલું કે કોઈ આઈપીઓને સક્સેસ કરવું હોય તો ઇટ ઇઝ ઇમ્પોર્ટન્ટ દેટ ગુજરાત ઇઝ અપ્લાય ફોર ધોઝ આઈપીઓસ. The GIFT Singapore Nifty, which was traded on SGX earlier, has now moved to GIFT City and which is traded as GIFT Nifty. So probably the entire dollar denominated trading on GIFT Nifty, which was in Singapore earlier, has moved to GIFT City today, and the exchanges in GIFT City operate 22 hours a day, right? That's the beauty of the entire market ecosystem in GIFT City. Now let's deep dive into the more on the treasury operations, because that's where we are going to have a larger discussion today. And I'll now come to Ketaki basically in terms of, if you can help us understand, because these companies may have subsidiaries overseas, they may have certain operations globally. So what kind of structures, you are seeing which can be set up under the treasury framework, and whether only multinational companies can set up, or even Indian companies can also look at setting up the treasury in GIFT City?
Sure, thanks. So before we talk about who can set up, let's understand what does a treasury operation do, right? Look at a group as a big, huge Indian family where you have people of all age and, spread across places. If one of your sibling needs money and you are with money, you wouldn't expect for your sibling to borrow. You will fund him. And if he had to pay interest for it, he would pay it to you. In simple Guju terms, gharno paiso gharma rayo, right? Again, when you have idle money in your wallet, you'd like to see if you can deploy it somewhere. Even if it is temporary investments, money market instruments, etc., it will fetch you something than just lying, doing nothing. These are all operations which your treasury will do. Now again, comparing it with your one big family, there's a CA in every family. Look at your treasury as your chartered accountant in your family. He takes decision for everybody. So he knows who has how much money. He knows who has how much necessity. He knows the business plans. He knows what requirements at what time each one of us will have. And therefore, because he has visibility on the needs, on the availability, and because he has the skill to understand how to deploy money so that it does not remain waste, he ensures that all of this is done in the right way, in a way where maximum efficiency from a funding perspective is ensured within the family, and no profit is lost out of the family. Now, again, there are times when you need to borrow. When you need to borrow, you need someone to back you. There would be, let's say, the head of the family who is well respected across the board. He would be there to say that, I will come and back this borrowing. If the son or the grandson does not pay, I will pay, right? So similarly, there will be entities within the group which have the maximum substance or valuation, and the CA will know that I can have the ability to ensure that I will leverage this guarantee whenever I need. Now again, from a logistical perspective, if your family is spread across geographies, what you would do is, if someone in the same geography has the money, you will ask them to pay to the other, instead of taking the time and process to send money from one geography to the other. Similarly, when you set up your treasury, you will ensure that Indian money is transferred within India, so you don't have to worry about FEMA restrictions. They are all domestic transactions. And if your offshore subsidiary needs money, and there is offshore payments required, let's say to any of your vendors, or if there are trade credits which are required to be provided for some export or import related businesses, all of this, if it is offshore, one of your offshore subsidiaries does it. So this CA in the family is the treasury center. You can set up this treasury center in GIFT. The treasury center in GIFT can be set up by resident Indian entities and also by offshore entities. There are entities which set up globally, they set up a global treasury center, and then there are multiple regional treasury centers, because often, basis the time zone and basis the ability to know the local markets, you would need a regional treasury center which has people with that local knowledge and local understanding of the market and the laws. So the treasury center set up in GIFT could be either a global or a regional treasury center as well. In fact, across all services for treasury, you are able to handle your Indian transactions also from the IFSC treasury center. So again, how would you do this? You don't need to have one bank account in which everybody puts that money, because those will be multiple other transactions which are not necessary. If there is money in your wallet, it remains in your wallet. But your chartered accountant sibling has the visibility on what is available where, which would be a virtual account. And I'm sure Maulik will be able to give a better view on how this works. But across the board, virtual accounts is where you will be able to see all of those transactions, and your pooling also happens virtually. And then these transactions are effected by the treasury center, because they are authorized to do most of these transactions. The IFSC regulations for Global Treasury Center allow you to set up a treasury unit, which is a branch of the parent, or an entity, which is a company. I think the detailed process may probably be, okay, I can tell the process as well. You need to identify the space. You need to make an application from an SEZ and an IFSC perspective. IFSCA now has a single window IT clearance, which basically means one application, and then on the back end, the SEZ as well as IFSC approvals are all sorted. Once you've got the approval, there are a few smaller approvals that you would need to get. As I said, it's a non-resident zone. So therefore, you would need your importer-exporter code. You don't have GST applicable, and therefore you would need your GSTI, and you need RCMC. You need a few other documents from a stamp duty perspective. So smaller things, and then your lease deed, and then you are ready to start. You need 5 people and a compliance officer now from a treasury center perspective. And that's basically your treasury center handling monies across all group companies. without actually having to move that account into gift.
Perfect. I think great insights in terms of who can set up. So probably for your companies or industries, if you have say subsidiaries in 3-4 countries which are dealing in multiple currency, then treasury in Gift City can be the right platform to deal with those multi-currency transactions. Now, these discussions will be irrelevant if we don't talk about tax benefits. So Jugal, is the right person to give us the major tax benefits overall from a IFSC perspective, and also from a specific to treasury operations, how IFSC is efficient structure compared to setting up operations in say Singapore or Dubai from a treasury perspective.
Perfect. Okay, so I did touch upon briefly, but let's now focus the lens from the Treasury Center perspective. First of all, this Treasury Center is a business unit in itself. Okay, borrowing the word from Ketaki, it is the chartered accountant, which is a separate segment. Okay, and it will be subject to income and expenses. And overall, if there is an income, because this is a business that you will do as a segment, it will be a profitable business. Government of India gives you a 10 years tax holiday. No questions asked. In fact, they have tried to sweeten the deal by saying that first 3 or 4 years you will establish yourself. So you can choose to take your tax holiday from the block of 10 years from in a period of 15 years anytime. So you can probably start in the 3rd, 4th, 5th year when the Treasury Center matures. That's the most important one. Second, to prevent that your cash flow is locked, okay, they are saying during the 10 years tax holiday, the Indian company which is paying you interest, etc., will also not do any withholding. So that entire withholding becomes zero. So that life cycle is taken care. The third part of it is if you are taking any borrowings from a non-resident or from a gift bank like Kotak, the payments that you make on that is, which is interest payments, is also not subject to any withholding. And that not withholding is a perpetual not withholding, not related to 10 years. So, therefore, naturally it means that your cost of borrowings goes down substantially, because if you take a Singapore example, it is a 15% tax cost. Okay, and in the language of a businessman, a 15% tax cost can result in anywhere between 75 to 150 basis points of extra tax cost for the borrower in India. So that is the kind of amount that gets saved. You can say of 100 crores, what is that 150 basis points going to be? Okay, so that's the second part of it. Now, the third part of it is treasury. And it is like there has to be absolute flexibility, right? When you move the money between the group entities. One of the functions of treasury is that you move it through loans between group entities, because loan gives you a flexibility to get the money in and take the money out. This was becoming a large hindrance from a tax perspective, because of the simple reason that India has a thin capitalization rule. Thin capitalization rule is simply saying that if you borrow from a non-resident, then your interest cost cannot be more than 30% of the EBITDA, okay, which is an hindrance to the business. And therefore, a representation was made, and the budget of 2024, this was removed from a gift unit, and that becomes attractive. Then, when the gift entity is lending to India entities, again, if it was lending from overseas entities, there is a thin capitalization. But if gift entity is lending, again there is no thin capitalization. And therefore, if you look at this entire overall structure, it is making it efficient. The last sweetener which has been put in over there, or probably second last sweetener that has been, second last sweetener which has been put in, is when a non-resident gets a dividend out of the structure, the withholding rate is 10%. Vis-a-vis when it is an India structure, it's a 20%. So these are the kind of things or benefits that this entire ecosystem brings. And I had mentioned it previously, with the entire BEPS Pillar 2.0 coming in, with the gift treasury, with India operating businesses which are paying 25% taxes, you will still be able to enjoy the 10 years tax holiday. vis-a-vis keeping our structures in Bermuda, Netherlands, and other tax havens, where they will be naturally taxed at the rate of 15%. So these are the platform of tax incentives, and how can be used will be case to case dependent in terms of what you want to do.
Perfect. So basically, 10 years zero tax, I think this is something which is, very important for such businesses, because otherwise you end up paying profit on the treasury gain that you generally, do it either from India or from the, other centers. Now, I think coming to Maulik Bhai, probably if you look at treasury activities, what is one of the important component is the liquidity management. And for liquidity management, because one of your subsidiary will have excess cash and you want to pull it to the GIFT City entity, right? And other subsidiaries in, say, South Africa is looking for some funding. Now you want to lend it to those companies. And meanwhile, the excess cash is required to be invested as well. So as a Kotak bank, what kind of infrastructure or the instruments that, that as a bank you are offering from GIFT City, which can be utilized as a part of the treasury activities?
So Sandip bhai, Ketaki talk about basically regulatory structure, and Jugal has given understanding about the tax related matter. Banking is a backbone here, right, for GTC. So while both the structures are there, if the banking backbone is not there, then it's very difficult to operate GTC, right? So what happened is that most of the banks, all the 30 banks, they are providing the multi-currency account to GTCs. Okay, they can open multiple currency account, like in different currencies. So IFSC, which is the unified regulator, they have approved some 15 currencies here. So basically you can open 15 different currency accounts. So as Sandip bhai said that there is one of the entity which is based out of South Africa. So then there is a different currency, okay? You have a subsidiary in Europe, then you must be having Euro currency, right? So there are different currency, you can open the multiple currency account at GTC, okay? What you can do is that you can pool the funds from that particular subsidiary to your GTC, okay? And all this management you can do through bank. So bank here provide a very good platform in terms of providing multi-currency account as well as a good net banking system. On net banking system, you can see all your accounts on single platform, and you can transfer on seamlessly and with a simple click. So all money at the end of day will reflect in your account, and you can decide whether you want to invest the surplus funds, okay, whether you want to park in FD, if you want to park in, say, commercial papers. So as Sandip bhai told, there are 2 stock exchanges which is operating in GIFT City. So there are different funds, okay, that is also available. They have some outbound investment products, okay. I think Sir is also on the board of multiple, right? They also have outbound funds. So those kind of investment opportunities are also available. So through our platform, you can invest on these different platforms and park those funds. Apart from that, there are multiple risk management, forex risk management products which is available. So if you want to hedge, because you have different currencies, right? You have Euro, right? You have CHF, you have Singapore dollar, and you want to hedge. If you want, you hedge those currencies at different market, like if you want to do in Singapore or if you want to do it in, say, London or somewhere else, you don't have like good volume. Instead of that, if you pull the same thing at one single location and hedge the same, that will give you a good benefit on terms of pricing. So all these tools are available with all the banks here, and you can do the hedging here. So that is the on FX side. The third thing is related to loans. Jugal has talked about the same thing. So what you can do is that you have a surplus funds in one of the subsidiaries and you have a deficit. So in one of the country, you want to have a funds requirement. So you can take fund from one of the subsidiaries where there is a surplus, and you can give loan to your other subsidiary. Similarly, on domestic side also, if you can give ECB, there is no withholding tax if you give it out of GTC. So all those things are available through banks. And all these foreign banks, PSU banks and private sector banks are providing these services out of GIFT City. Apart from all these things, there are global custody services, which is provided by some of the banks. So Kotak is one of the such bank which is providing global custody business. So what happened is that if you buy any stock here, right, you have NSDL, CSDL, your stocks are placed there, right? In case of global market, if you want to buy any stock and if you want to park the your shares or stock, then you have to have a account, and that account service is provided by this GIFT City IBU's entities. So this is one of the services provided by IBU.
Just to continue that discussion, I think ઘણા બધાની subsidiaries overseas હોય છે, સિંગાપુર, દુબઈ, હોંગકોંગ, સાઉથ આફ્રિકા એન્ડ ઓલ. હવે તે subsidiaries ના bank account generally they open in the respective overseas branches. So question number one, is it possible that they can open bank account of those subsidiaries with IBU? And second, if yes, do you also provide dollar denominated deposits, and if yes, what are the interest rates around it basically?
So good question, Sandip bhai. All non-resident entities can open their account at GIFT City. It is not required that they have to have their offices at GIFT City. So if one entity is having, their subsidiary is having office in Singapore, or let's say in Europe, they can open the account here. And I will tell you, Sandip bhai, from my experience that some of the foreign banks are not ready to open the accounts of Indian subsidiaries overseas. It's a Herculean task to open account in foreign jurisdiction. And we, IBUs, are typically open foreign currency account for all these overseas entities within 3 to 4 days time. So that is a plus point for them. And another thing is that, see, you are in the same jurisdiction, right? Your promoters are sitting out in India, and we are also in Gandhinagar, okay? So relationship point of view, it is very critical. In overseas jurisdiction, you don't know your relationship manager, okay, your banker, so it's very difficult. Another third thing is that the charges to keep the account at overseas jurisdiction is very costly. They charge hefty charges, right? But in case of GIFT, IBUs are not charging anything. So that way, these are the three example and advantages that you can say that to operate out of IBU.
And deposits?
And deposits, yes, we provide better deposit rate than overseas jurisdiction. So that way, it's good for them to keep deposit with us.
The cherry on the cake.
Yeah.
Correct. Now, Ketaki, if you ask most of the companies today in Gujarat or even in India, many a time they have a huge cash surplus. Now, probably they always wonder how do they take the money out, for not from a treasury perspective but also from an investment perspective. And FEMA, we believe there is a provision called OPI. So can you throw some light in terms of, the Indian companies say based in Ahmedabad wants to invest say 50 crore rupees in the global markets. How GIFT City can help them to kind of invest in the international markets?
So before I start there, I think just one point I wanted to add to what Maulik said. While Kotak has 2 IBUs, I should say most Indian banks have their only branch, offshore branch in GIFT. And what GIFT has offered to the banks as well as to the Indian companies is closer offshore. They don't need to bank with offshore banks only. They can continue banking with their own banks because now their own banks have an offshore branch. And therefore, because the Indian banks are so close to the promoters, it's easier for them to open those accounts as opposed to the foreign banks who don't understand you. So I think GIFT as an opportunity is a big one from an Indian diaspora perspective. Going to the offshore investments. So under FEMA, there is ability to invest offshore in 2 forms. One is overseas direct investment, and the other is overseas portfolio investment. What is the key difference between the two? When you do overseas direct investment, that is when you are setting up, for example, your subsidiary or a project company which will actually do operations. You would have some kind of control, you would have 10% or more interest, shareholding / voting rights in them. It's actual business and strategic investment. That's ODI, right? Up to 4x of your net worth and your group net worth, you can make ODI investments offshore under FEMA. OPI is overseas portfolio investment, which is when you are making investments but you are not expecting to have control. You are doing this more from a financial investment perspective, right? That's portfolio investment. Today you can do a bunch of your portfolio investments which you would say, as HNI, UHNI, or large corporates or family offices. You would have made those investments in offshore funds and offshore fund managers handling your investments. Today you have Indian fund managers like Multiples and Kedara who've set up in IFSC, who would do outbound fund investments, and your investments from those OPI route, from those IFSC based funds will be invested across the globe. You get returns from people who you trust because they are onshore, right? Apart from that, you can yourself make some of these investments under OPI route through gift offices, your treasury centers, for example. Again, one key advantage which from a FEMA perspective is available for IFSC is that while OPI is permitted only for listed Indian companies to make investment offshore, from a gift perspective, even unlisted Indian companies can make an investment if you are investing it through a gift vehicle. So an unlisted company can invest OPI in gift, although it is offshore.
So I think this benefit is only available through Gift City. So say your net worth is 100 crore in India, but you have ability to invest, say, in the international markets. And as Ketaki mentioned, you can invest 50% of your net worth using Gift City structure under the OPI, which is generally not possible if you want to do it directly, say, from Ahmedabad to Singapore or Dubai or Hong Kong. So I think from a diversification perspective and investment perspective, this will play a very important role. I don't know how much time we have. It's up to 7:30 or 7. So we have 15 minutes more. So probably what we will do, we'll take a couple of questions more to get more insights on the individual side of it as well, and then we'll open up for question answers as well, so that we can also answer some of the questions that you may have. But Jugal, I understand that you have been talking to multinational companies in India, as well as multinational companies overseas. And we have example of ArcelorMittal, which has set up a treasury operations. Now the needs of treasury activities may differ from sector to business, right? If you can help us understanding kind of couple of use cases in terms of, say, a multinational company in India has 5,000 crore excess cash surplus generated over a period of time. How gift entity or activity can help them to diversify or use efficiently for their global operations. Similarly, multinational companies having operations overseas, also in India, how treasury can help them to also support their India operations basically.
So this is very, very critical, because honestly, any conversation that I have had with people are not concerned with the tax holiday. What they are concerned really is, what is the platform allowing me to do, right? It is like if I come to I have 100 crores rupees in my pocket, but I cannot do anything from a jurisdiction, makes no sense for me, right? And that's really the excitement over here. Let's take an Indian headquartered company. What is happening, and I'd slightly touch upon that, and I'll detail it out over here, is when they are wanting to go global, they have always had a problem of the platform. And what was happening was, Indian company was creating a individual subsidiary in various jurisdictions. One in Singapore, one in US, one in UK, etc. Now think of it that it becomes very inefficient because moving cash between the entities, or more so if I want to put capital, because some of the jurisdiction will say we want hardcore equity. So you will not say the money goes from India to Netherlands as equity and from equity from Netherlands to Singapore as equity. Becomes a very inefficient structure from a tax perspective because you're looking at multiple structures. So the other alternative is you get the money back into India, you hit one currency risk, you move the money back, again currency risk. You are shaving off a lot of your money, hard-earned money on the conversion risk, because there is always a spread between the bid and ask, and I will become unpopular with the bankers, but that is the consequence of this, right? It is the way the world has been set up. And therefore, GIFT becomes attractive. You set up one blocker entity in between in GIFT City, where you push the money, as Ketaki said, under 400% of a net worth. Once money is there, okay, it is in dollar, because this zone A does not allow you to do any INR transactions for business, and therefore, and the second thing is there are no capital account convertibility related issues, no FEMA, and therefore it becomes a very easy thing for you to move the money, no currency risk, very, very, very efficient. So that is what Indian companies are doing. Some Indian companies are going step further, and these are very, very large companies, because what happened, if you would have tracked the ecosystem, we do a lot of ECB borrowings from overseas, okay, which till 30th of June 2024 was subject to tax rate of 5%, which, because it is the lenders who have the upper hand, they used to put a term that any India withholding has to be added to your cost, which is in the tax world cost a grossing up cost. Okay, a 5% cost on grossing up is okay, everybody is okay, but that after 30th June moved to 20%. Became very inefficient. To give you some numbers, it results in additional tax liability of 28% approximately. Okay, and I have an investment banker over here which has an impact, okay, of anywhere between 100 to 200 basis point, which is 1 to 2% on the borrowings, and he will tell you it is a deal changer. Okay, and that is where GIFT comes in, because that 27% through a GIFT structure becomes zero. 2% reduction on $100 million loan is a big thing for anybody. And therefore came the banks. They started doing this and they started lending to India savings. Then came the second category, is that global lenders which are not banks, they are now started coming up, because they are saying, भाई मारो customer आवे छे ने मने कहे छे तमे gift માં નથી તો તમારી પાસે loan નહીં લઈશ. As simple as that. So they are coming. Third one, large Indian companies, okay, starts off with the PSUs, now the Indian private large companies will come in. They will set up the same platform for taking borrowings and then lending back into India. N number of use cases are coming up, and clients are now telling us the use cases to sign off on, rather than we going to the client and saying, sir, ये कर सकते हैं, बोले नहीं, हमको ये 10 चीज करना है, तुम कराओगे कि नहीं कराओगे, allowed है कि नहीं. And that is where Sandip bhai has been extremely helpful and on the ground knowledge. Anything, yes, there is a problem, there is a solution, this is where we are thinking of it. That is the way it is happening. Take it forward. Offshore structures, same problems. Mauritius में जाओ, किसी को पता नहीं Mauritius में क्या हो रहा है. Everything is a dabba entity over there. Okay, here you create with proper substance. Your director does not need to fly to Mauritius again and again for board meetings. I don't think people are worried about the cost of traveling. What is today more valuable is the time. Think of a CXO spending 2 days on travel. It is just waste of time, criminal waste of time. All those things, same, they are able to control it more. The other thing is that some of these companies wanted to create a holding structure in India, okay, and then they used to hold the Indian operating entities, which had another set of complications because it was triggering the core investment company stroke NBFC regulations in India, which was extremely, extremely onerous, which all gets bypassed through a gift structure. Again, lender's point, I have spoken of it, I will not speak about it again. So everybody has use cases, very strong use cases. The one that is specifically interesting a lot is one which has nothing to do with India. Okay, a person, UK company setting up a treasury in India for lending to Singapore, US, Luxembourg, all jurisdictions. Nothing to do with India. But they are saying, I have people who are actually running this, because we have the concept called GCCs, right? Here GCCs is nothing back office. Now we have matured to a level that essentially we are running the function. Not driving, we are running the function. Okay? And they are saying, इसको ही मैं इधर बिठा के ये function के calls लेगा. Cost arbitrage, intelligent people, tax benefit, no capital account convertibility, and all of this added together, there is saying हम लोग को 15% global tax नहीं भरना पड़ेगा, because we have other entities in India which is operating entities for business purpose which are paying 25% tax. तो ये सब करने के बाद I am getting such wonderful platform. Why should I not come to GIFT City? Is the simple use case. Last thing, Sandip bhai, I wanted to mention, if you look at the structures of IFSCs globally, it is categorized into two types, which is Bermuda, Cayman Islands, etc., which are standalone IFSCs, International Financial Service Center. They have nothing to do with their economy, because economy में कुछ है ही नहीं. They are a platform for you to go across the world. Okay? And then there are something like Hong Kong, Dubai, which has to do a lot with their economy. And that is where they say they sell their IFSCs. Now think of it on numbers, is Dubai in terms of economy is less than 20% of the GDP of India. And it is growing at a pace which is lower or lesser than India, which is also the case for Singapore, which is also the case for other countries. They will be developed, but their growth rate and size of economy is smaller. Okay? With the Indian economy growing at such fast pace, with such a large economy, and the kind of support that it will provide to the IFSC, it is just going to be crazy in the coming years. So I think that's a wonderful opportunity or platform that we have right now.
So great, thank you very much. I think, discussed in length about some of the transactions which can happen. Maulik, but do you want to add anything? Okay. So I think probably we can take couple of questions, around it. And prior to that, we also have a trade finance or a bill discounting firm 360TF also present here. And I think your perspective is very important for all of us, because many times Gujarat is, I'm sure we are the leading exporters in many sectors, pharma, chemical, textile, ceramics. I think we are one of the leading exporters. These exporters have dollar kind of invoicing, and many times they want to actually do the dollar bill discounting so that the working capital can move fast. You have set up a platform in GIFT City. If you can quickly in 2 minutes help us understand how these companies can participate in your platform today, so that their working capital can move quickly, basically. Yeah.
Hello. Thank you, Sandip bhai, for introduction. So 360TF, we have set up a finance company in IFSC. So 360TF Capital IFSC Private Limited. Our primary product is export factoring. So from an Indian exports point of view, from an Indian exports point of view, if you are looking at bill discounting as a product, we are offering export factoring, and export factoring on a non-recourse basis. So when you compare bill discounting with the factoring type of product, what you will realize is when you go for bill discounting, is typically a recourse, meaning when the banks give you facilities, they look at your balance sheet strength. But when we look at factoring, we look at what your buyer strength is. So what we do is we reach out to our factoring partners in different geographies, say US, UK, Canada, Singapore, or the other European markets. And we look at the credibility of the buyer. And once we are sure about the credibility of the buyer, we are immediately able to offer you upfront 80 to 90% financing and at a very efficient rate. And what happens is, if you have a tenor of say 60 to 90 days, you get upfront discounting, and we collect from your buyers on the due date. So in a nutshell, this is what we are doing.
Even unsecured financing is possible through your platform?
Unsecured. It is unsecured.
It's unsecured.
It's unsecured.
Correct. It's regulated by IFSC, GIFT City, not by RBI.
Yeah.
So it's very important for a working capital management, because the payment which you are going to receive after 60 days, you just put your invoice on their platform, and you can get the money upfront basically. And I think, as they mentioned, many a times they offer unsecured loan, which generally many a times banks don't offer, right?
Yes.
So I think it's a good way to look at it. Thank you very much for your perspective. And because I will also take this opportunity to also get your perspective on one aspect, because AMA is well connected with industry bodies. I understand VATWA, GIDC and all. Do you think we can connect or reach out to these exporters so that something which is available closer to our home, they can take the larger benefits of, say, the international banking or a trade finance activities, and happy to even ITFS platform. So how do we work and collaborate?
So certainly one is, at AMA we need to do one series of programs. Two, we promote this series of programs as extensively as we should be. So that is, we have to have a proper structured thing. And if I ask, are we recording this, or is this YouTube live or not? This is already YouTube live. It would be on the YouTube channel of AMA also, right? So that link also we should circulate. This is so much of knowledge today. Honestly, I would not have been knowing even 50% of what I am learning right now. That withholding tax that we are talking about, and many more. If I mistake not, there is an international arbitration bench also, Singapore.
Yes, there is a rep office of SIAC.
Yeah, SIAC rep office is also there. But that, does it mean it's a bench? We can call it, or it cannot bench. But there's a rep office. So
Yeah.
can.
But IFSC is looking at coming up with its own international.
So such things happen. So there is the larger contracts or joint venture agreements with multinationals are also, if local jurisdiction, arbitration. So many things. So AMA certainly, Odav industrial area which covers Vatwa, Odav, Naroda areas, we want to promote this there also. We should have this panel discussion over there. We're closer to the industry also, one. Now, of course, we can invite, but the difficult for the managers, senior people from there to come here because they are working over there. And two, this YouTube links also should be promoted as much as possible. So this can be repeated whenever at their leisure the people can see and look at it. And then, of course, should convert into action. So whom to connect at your place, that also we must try to communicate to them. So answer is very much yes, very happy, because that's the purpose of AMA also, where how can we facilitate as much for the industry, and so much of benefits that they have, and quite a many are doing international transactions over here.
Thank you very much. Any questions? We can take a couple of questions. Yeah.
Good evening, all the panel members and all, and thank you for delivering insightful knowledge. My question is to Jugal sir, that you tell me about the non-resident taxation rate regarding dividend payment, 10% and 20% different. So can you please elaborate it with an example, and how the IBUs play a very vital role in that transaction also?
Okay, IBUs have no role to play in this. IBUs એટલે bank છે, okay? જ્યાં structure છે is for private company, okay? Let's take an example of Tata India setting up in Gift City, okay? If they get a profit, they will give dividend to India. That dividend is taxable in the hands of Tata India at the rate of 25%. But if they distribute it further in the same financial year, okay, then Tata India will get a deduction for this. So it becomes a zero tax. So that inefficiency is taken care. This is a normal law in India, which is back-to-back dividend is exempt. Okay, that's logic. Now take off Apple. Apple sets up a gift entity, separate legal entity, which has earned a profit of $100,000, which it wants to distribute. Now if Apple India, okay, wanted to distribute this $100,000, they would have to pay 20% tax. Okay, as per domestic tax law, you go to the treaty, compare it, whatever is lower applies. Typically it's 15%, or 15% is the benchmark generally. Okay, so they apply 15% rate. If you set it up in Gift City and there is a profit of $100,000, you want to distribute as dividend, the tax rate becomes 10%, which is benchmarked to global best practices, and sometimes even lower than the global best practices on the treaty rates. So therefore the 20, which is domestic tax laws, it becomes 10% under the gifts. That is an attractive regime which has been provided.
Mic, please, here.
On the business front of Gift City. Now you said that a lot of foreign universities also are taking interest and coming to Gift City. What is the purpose behind that, foreign universities coming to Gift City?
Sure.
And how do you feel that, how far it will be successful to establish in Indian context?
Sure. So if you look at the current Indian education system and the UGC regulations, typically it did not permit 100% establishment of a foreign campus. Either they will have to have a joint venture or a dual degree programs. But for the and if you look at the other global jurisdictions like Dubai, Singapore, they actually allow campuses of a foreign university. So you will find a New York University campus in Singapore, right? So idea was to see how do we allow, first of all, such renowned universities to set up campus. And second, many times when you see every year from India, close to 7 lakh to 8 lakh students go abroad, and now I think number is close to 1 million for study, while the payment of fees are happening in dollar terms to the campuses, but when they go out, they actually spend a lot of money in terms of staying there and logistics and all of that. So the huge cost was involved, and the dollar outflow, rupee outflow was happening in terms of the dollar payment. So with that objective, Government of India decided that we should allow campuses to be established in India, and Gift City was an ideal location because it was actually free from many domestic regulations. So UGC doesn't apply, AICTE doesn't apply. It's a free zone, so there are tax benefits also. It also allows them to take fees in dollars, which is generally not possible in India. So for foreign universities also, it was very efficient to kind of set up campus because repatriation of capital is very easy without any restrictions. And with that benefit and all, 2 Australian universities have set up campus. One is Deakin University and second is University of Wollongong. Now the advantage of having this campus is, one, what the regulation says that it should be QS 500 rank university. So first of all, that filtration has already happened in terms of getting the quality institutions. And today, if you look at the ranking of our Indian universities, I think even some of the IITs have ranking of 180 or 190. And so from that perspective, the institutions which will come up here will be of top standard. Second, 2 UK universities have got approval recently. So, instead of going to say a Coventry University or Queen's University Belfast in UK, they will offer the same program, same degree, without any modification. So that is one of the requirement under the regulations, that they cannot deviate from what they are offering in their home country. So that is also taken care in terms of the quality of education that they will offer. So I think from the perspective of the students who are present here, or your own kind of family members who are actually looking for some of the advanced programs, these universities can be the right platform, because many a times these universities have expertise in some of the programs. So, Wollongong is known for, say, fintech related programs. Deakin is known for cyber security related programs. So these specialized programs now can be availed, at doorstep with the same quality and the education. If you ask me about the fees, I think mostly they are charging 50% of what they generally charge in their home country. So from a fees perspective also, it's much beneficial. Thank you. So so they have tied up with the student housing providers. So students, basically it's it's a vertical campus basically.
So no residents.
Students can identify their own residence, or universities have also tied up, so they can also stay within those facilities. One question here, and then we'll come to you. Yeah.
IFSC and an SEZ.
Yeah.
I mean, it is the same, or it is, tax benefits are same for both the, what is the basic difference?
Sure. Jugal, you want to take this? Yeah.
Okay, sir. Sir,
Okay.
Sir, GIFT City, okay, if you look, is a larger sphere of things, okay, and in that there are two parts, which is the domestic area and the non-domestic area, and Ketaki covered in terms of why the SEZ law was required. Now, on top of the SEZ law, there is also an International Financial Services Center. Okay, in the sphere, let's assume a 30% part has been carved out as an International Financial Service Center. Now, the attraction of that zone is, as he mentioned at the beginning, it is considered as a person resident outside of India. So visually, you are equivalent to a Singapore company, okay, which means all your transactions will be in dollar. You are not subject to any capital account restrictions. Okay. For example, if you are sitting there and want to invest in US, nobody asks any questions to you. But if you want to invest back into India, okay, you are subject to foreign direct investment rules. So that is the Singapore platform which has been brought over here. And coming to your tax question, all the tax incentives that we spoke of is linked to the International Financial Service Center. That's one. But one thing which does not get spoken about a lot is that irrespective if you are in a domestic zone or international zone, there is a Gujarat state incentive policy which is there for promoting employment, which in a very simple term, all the India back offices, GCCs which are setting up over here, and to give you some statistics, even it is there in the newspaper yesterday, in India there is one new GCC setting up every 1 week. Okay, that is the kind one, and these are all big ones. Okay, Vanguard was the last one, and average 2-3,000, and it is going up to 50,000 people too, the larger ones. So when they set up over here, why they set up over here? Talent, labor cost arbitrage. Now add to that state incentives, which only further enhances the labor arbitrage. So therefore, this entire GIFT City ecosystem with the international zone, with the domestic zone, and the state incentive really makes a lot of sense for a lot of people why they want to come in over here. Not for the 10 years tax holiday, but for the state incentives.
State incentive, yes. Anyway.
Yes.
But there are GCCs which is related, doing business related to finance, like Bank of America. They have set up their office, they have some 3,000 plus staff over there. So those kind of, if you do any finance related capability center, that can be set up out of SEZ, IFSC zone, and not the DTA. DTA is only for other kind of activities.
Actually, just to add to what Jugal and Maulik said, IFSC is basically financial services. So anyone who does financial services are the only ones who can set up. So let's say if there is a construction company which sets up a GCC, or an FMCG which sets up a GCC, they would not be eligible to set it up in IFSC because they're not setting up a financial service. Although they may be free to set up their treasury centers in some sense, debatable, but a GCC in IFSC can only be if you're in a financial services sector, like for example, Bank of America, or if there's a broking group, things like those.
But SEZ possible.
Yes, but you can set it up in the DT also by SEZ.
10-year tax holiday.
That's not available for the
It is
SEZ.
only for IFSC.
Tax year. So SEZ now do not have.
That expired.
So that's
See, there are multiple SEZs in the country. The SEZ regime was originally brought in to promote manufacturing, right? And therefore, at that point in time, a bunch of benefits were brought in for SEZs, right? As I mentioned at the start that, it was simpler to house an IFSC in an SEZ, which is why it was the simplest way to do it. But an SEZ, as Sandip mentioned, is still a domestic entity, although it is permitted some of these export-import transactions without duty. But a IFSC entity is FEMA non-resident. Tax-wise resident, territorially resident, but FEMA-wise, they are non-resident. So capital convertibility is not a problem.
I'll give you one simple example, which will make it very simple. If, and sir spoke about aircraft leasing, right? If there's a leasing company in India, okay, and if it was importing a Boeing plane, wide body plane into India, okay, and leasing it to the Indian airline companies. The moment the plane comes in the customs zone, outside the customs zone on India, it is subject to custom duty, which will become very, very costly. Okay, so what happens? They have to notify the SEZ zone. Now, today with the finance companies over here in Gift City, they import it into India as a product. Okay, and because it is coming to SEZ, there is no custom duty. From there, they are lending it to they are leasing to Indian companies from which they are getting a lease. Okay, and you think of it from the entire chain, it is only because there was a SEZ law in India that we could save on the custom duty. And that is therefore a legal requirement which triggered the SEZ requirement to come in. And there are many use cases on this, but this is a very good example for explaining the need of SEZ. Absolutely. Yes.
Yeah. There is one more question in the back.
Sandeep bhai, I want to ask that those companies who set up the business in DTA area, so they get any kind of the benefit of the taxation in other, IFSC get a lot of benefit if those companies set up business in IFSC area. Because already there is lots of IT plus fintech company have lots of exemption in tax slab. But in DTA area, what kind of benefit?
So domestic zone basically is as good as Ahmedabad, Gandhinagar, Mumbai, Delhi, right? It's a part of a mainland territory. Now, technically, the domestic zone does not have any central tax benefits. However, as Jugal mentioned, depending on the business, so if you are setting up ITITS units, so ITITS units માટે Government of Gujarat ની એક बहुत attractive incentive policy છે, જેમાં they provide operating expenditure subsidy, capital expenditure subsidy. They provide employee-related, provident fund reimbursement. So incentive policies of Government of Gujarat will apply in the domestic zone. One benefit which is available in the domestic zone is a stamp duty benefit because it's a state subject. So capital market entities જે Gift City ના domestic zone માં subsidiary setup કરી છે or a registered office setup કરી છે, they get stamp duty exemption from Government of Gujarat. So that's one benefit which is available. Correct. So today, out of 900 acres of Gift City, 261 acre is the special economic zone, and SEZ and IFSC are the same zone or area. We have ability and provision to also expand as and when required, but the current structure and the capacity is enough to take care for at least next 5-7 years in terms of housing large businesses, but there is a possibility of expanding, the SEZ and IFSC. No, so the currently Gift City is an authority for that 900 acres of area. Surrounding zone is not part of Gift City, it is part of Government of Gujarat, and that land is also owned by the private landowners. But within the special economic zone and within those 900 acres, so this 261 acre can be expanded to say 350 acres within those 900 acres, which is already under the Government of, Gift City basically.
So the financial services works very differently. As Sir said, banks are $71 billion. Let's assume their interest rate is 10%, is $7 billion of revenue that they are generating. It is not like a manufacturing unit that you require 100 acres of land. That can be done in a 2,000 square feet office, which is what Kotak is doing. So financial services is about money, ability to move money and efficiently with lesser set of people. It is not a manufacturing that will look huge requirement of things. We'll see more vertical structures coming in rather than going horizontal.
So thank you very much. I think some of the other questions we will take offline. We overshooted time. It's 8 p.m. So thank you, panelists. I think it was a very interactive and insightful discussion and session, and I'm sure this will help many companies to take this forward. Thank you.